Hello friends, in this lecture we are going to start a new topic, accounting treatment of reserves and accumulated profits and losses. Right? This is our new topic, accounting treatment of reserves and accumulated profits and losses. Now I'm going to explain this topic with a very simple example. Say there are two partners X and Y. Right? They are sharing profits and losses in the ratio of 3:2. Clear? There are two partners who are sharing profits in the ratio of 3:2. For the year 2015, they earned a profit of say rupees 50,000. Clear? Now what happened is they decided that out of this 50,000 they will take 10,000 as reserve. They will keep 10,000 as reserve for any future contingencies. As you all know, the reserves are created to meet any future contingencies. Right? Clear? So there are two partners X and Y. They are sharing profits in the ratio of 3:2. In the year 2015 they earned a profit of 50,000, and out of these 10,000 they kept as reserve for any future contingencies. Now what is the profit left after this? Profit left is 50,000 minus 10,000, this comes to 40,000. This 40,000 profit X and Y distributed among themselves. What is X share? 40,000 into 3/5. This comes to 24,000. Right? And for Y, 40,000 into 2/5, 16,000. They distributed among themselves. Clear? Now this general reserve that is created out of profit to meet any future contingencies. Now this 10,000 is also a part of profit only. If they had not created reserve, this 10,000 would also have been distributed among the partners. Simple. Right? Now what happened is, on 1st of April 2016, they decided to change profit sharing ratio to 1:1. Right? Now what happened? They both decided, okay, finally, they decided that from now onwards we will share the profits in the ratio of 1:1. Now what happened is, on one point there is a conflict among the partners. A conflict arises between X and Y. What is the conflict? They say this 10,000 reserve that is lying with the firm, this is also a part of profit. Right? Had this been not a reserve, this 10,000 distributed, how much would have X got? What would have been the share in old ratio? They were sharing profits in the ratio of 3:2. Right? He would have got 3/5. He would have got 6,000 and Y 4,000. But the scenario is, now that they have changed their profit sharing ratio to 1:1, now if it is distributed to X and Y, now they will get 5,000 each. There is a loss of 1,000 to X. So X raises a question. He says that this general reserve was created when we were sharing profits in the ratio of 3:2. But now if we distribute, I will get 5,000. Earlier I would have got 6,000. So that's a very logical conflict between the partners now. Now what happened is they called their friend Z, who is a chartered accountant, to resolve the conflict. Okay, they both agreed that whatever solution Z will give, they will agree to it. Very simple. Okay, Z came to their office. The three of them had the meeting. Z listened to both of them. And finally, Z gave a very simple solution. He said, whatever you have earned before the change in profit sharing ratio, distribute it in the old ratio. What is the solution is, whatever Z says, whatever you have earned before change in profit sharing ratio, distribute everything, distribute among yourselves in old ratio. Why old ratio? Because these profits were earned when their ratio was 3:2 and not 1:1. Right? See, this is, I'll explain you with a timeline. This is timeline. Right? We are standing on 1/4/16. This is 1/4/15. During this period, they earned a profit of 50,000 when they were sharing profits in the ratio of 3:2. Now they have decided to share profits equally. So he says, whatever you have earned before 1/4/2016, when your profit sharing ratio was 3:2, distribute that in the profit sharing ratio of 3:2 and not the new profit sharing ratio. Whatever you will earn after 1/4/16, distribute it in the new profit sharing ratio, that is 1:1. This is a very logical solution, that whatever you have earned, right, during the prior period when your profit sharing ratio was 3:2, that thing should be distributed in 3:2. Right? Otherwise, it will be a loss for the one partner and an unnecessary gain for the other partner. Right? So, X and Y both agreed to the solution of Z, which to them also seemed to be very logical. He says, whatever you have earned before change in profit sharing ratio, distribute among yourselves in old ratio. Now see, reserves are also a part of profit. How we create reserves? Reserves are created out of the profits that we have earned. That is also our earned income. Right? So, according to the solution of Z, everything whatever you have earned should be distributed. So according to this solution, all reserves should be distributed among partners. Right? He says everything whatever you have earned, distribute it. According to that, it also says all accumulated losses, that means the losses that have not been written off, that are appearing in the balance sheet of the company, those losses should also be transferred to, partners' capital accounts. Right? Along with the accumulated losses, there is also one more thing, that is deferred revenue expenditure. That is expenditure which is not written off in 1 year, which is to be written off over a period of time, that is deferred revenue expenditure. Right? Clear? So it says all the reserves should be distributed among partners. All the accumulated losses or the deferred revenue expenditure should also be transferred to partners' capital accounts. Now if we have to distribute the reserves among the partners, what will be the journal entry? Now partners' capital accounts, reserves is what? The profits only. If we are distributing the profits among partners, the partners' capital accounts will be credited, right? We'll say reserves account debit to partners capital account. Right? This is how we will be transferring the reserves at the time of change in profit sharing ratio. The reserves that have been created out of the profits which were earned when there was no change in the profit sharing ratio, when the profit sharing ratio was 3:2, those reserves have to be distributed among the partners. Clear? And if we have to transfer the losses, then the partners' capital accounts will be debited. Partners' capital account debit to accumulated losses account and to deferred revenue expenditure account. This is a very simple logic that we will not let anything appear in the balance sheet that attracts a conflict among the partners. That was the basis of this conclusion by Z. He says whatever you have earned, right, whatever you have earned when there was no change in the profit sharing ratio, when your profit sharing ratio was 3:2, distribute in that ratio. Whatever you will earn in the future, distribute in 1:1 and end the conflict. He says do not let anything appear in the balance sheet that will attract conflict. He says distribute all reserves, do not show in the balance sheet. Distribute accumulated profits, distribute accumulated losses, write off deferred revenue expenditure, transfer it to partners' capital accounts, finish it off. Do not show in the balance sheet year end. Right? Afterwards, when you have changing the profit sharing ratio, after that do whatever you want to do. Create reserves, create accumulated losses, deferred revenue expenditure, whatever you want to show in the balance sheet, show. To avoid the conflicts regarding the past profits, distribute everything. Clear? So this is how we will be treating reserves and the accumulated profits and losses. Now there are few things in this topic. Talking of reserves, we can have many type of reserves. We'll talk of a few reserves here. One is journal reserve. Journal reserve is created out of profits to meet any journal contingency. Right? It is free reserve. Then we have one we have is workmen compensation reserve. Workmen compensation reserve. Another one we have is investment fluctuation reserve. Clear? Right? And one more we have is employees provident fund. Now this employees provident fund, this is a liability for the business. This fund is not created to meet any contingency. This is a liability for the business. This has to be paid, right? In any case, to the employees at the time of paying the salary, right? This is created for that purpose. This is a liability for the business. This will not be distributed. This will not be distributed among partners, right? So whenever we talk of the distribution of reserves, we will not talk of employee provident fund. Employee provident fund will not be distributed among partners because it is a liability for the business, right? In the next lecture, we will discuss in detail about the workman compensation reserve and the investment fluctuation reserve. We will talk about these two topics in detail. They need a special attention. Clear? So, in the nutshell, this is how we'll be treating the reserves and the accumulated losses and deferred revenue expenditure. Clear?